startup business loans up to $25,000. You do not need financial statements or a business plan for startups. If you're looking to get a loan to start your business, you don't want to go to the big banks. There are other lenders out there who specialize in small business and startup financing. So you really have to know where to go and find the money. And that's where I come in. What a lot of people don't understand is that when banks issue loans, just in the same way when mortgage lenders originate mortgages, they'll originate those loans and then they have to sell those loans off. They have to clear up balance sheet space so that they continue to lend. There's a process. You have front end origination, but then you have a back end secondary market. Just in the same way with SBA loans and other types of loans, the loans have to meet certain qualification to qualify for the secondary market. So in order for a bank to sell their mortgages to Fannie Mae or Freddie Mac, it has to be what's called conforming. Same concept when it comes to business loans. If there are loans that are too risky, private investors are not going to purchase them. And this is one of the reasons why a lot of large banks are reluctant to providing loans to small businesses, because small businesses inherently are going to have more risk than more established companies or Fortune 5,000 companies. To incentivize banks to be able to continue to lend to small business and startups, there has to be some type of intermediary where they can guarantee the loan, or at least encourage the banks to extend loans to these smaller startup and more risky business enterprises. One solution to that are SBA loans, because SBA loans are guaranteed. So if the borrower defaults, the lender can still be made whole. Another solution is ScaleLink, a secondary market for CDFI originated small business microloans. Microloans are $50,000 and under. Not to confuse this with SBA Express, which goes up to $150. Microloans are specifically $50,000 and under. So these are going to be the easiest loans to get approved for. These are going to be the most risky loans because a lot of times these are startup businesses. Maybe they haven't proven a concept, or maybe they don't have adequate credit, reserves, collateral, or credit history. So basically what ScaleLink is, it's a secondary market for CDFI originated small business microloans. So essentially what they're making it easier for CDFIs to be able to sell their loans on the secondary market. According to the American Banker, this fund helps banks buy CDFI microloans on a bigger stage, boosting CDFI loans through a new secondary market and making small business lending work for more people without anyone noticing. So what happens, let's say a CDFI originates a loan, usually those loans will just sit on their balance sheet, and other bigger banks are reluctant to purchasing those because it just is more risky. So what this particular fintech is doing, ScaleLink, is they're making it more attractive for banks to purchase these CDFI originated loans. Now, what does this mean as far as getting access to capital? You got to read between the lines. ScaleLink has a network of CDFI banks in their platform, and they're facilitating the purchase of these CDFI originated loans to larger banks. So that means the CDFIs that participate with ScaleLink is going to be easier for them to offload the loans that they originate. Therefore, it's going to increase their lending capacity. The reason why I'm sharing this is to share with you some of the participating CDFI lenders that utilize ScaleLink. They're going to have more capital to continue to relend. Now, since late 2020, ScaleLink's sustainable secondary market for CDFI loans has provided $54.9 million in capital to CDFI partners, donated $6 million back to CDFI partners, sold $36.8 million back to bank partners, and purchased over 3,500 loans. ScaleLink bundles microloans from different CDFIs and pull them together for banks to purchase. This translates into real change for communities and people who need it the most. Now, here's an example of a CDFI and the business that they originated a microloan for. So this was El Tiny Cafe based out of Berkeley, California. So Working Solutions, which partnered with ScaleLink, to date has provided $3.4 million of capital and $390,000 of unrestricted funds to help Working Solutions support more borrowers like El Tiny Cafe. Lift Fund has also partnered with ScaleLink. Now pay attention to this. For those of you who are looking to get access to capital, if you have a low credit score, you need money for your startup, look at the partners that they have. These are CDFI lenders providing their loans in the secondary market through the ScaleLink platform. ScaleLink it packages all these microloans together and they sell these portfolios to larger banks. So if you know the CDFI lenders here, you know they have a pipeline to offload their loans and continue to relend. So by understanding that, you know that these CDFIs are going to have a steady flow of capital to lend to your small business. So some of the examples include Byline Bank, Coastal's State Bank, Midwest Bank, Cross First Bank, Eagle First Bank. You got Minnesota Bank and Trust, Lyft Fund, and plenty of others. People's Trust, Dream Spring, Ascend US, Food Shed Capital, Action Opportunity Fund, Main Street Launch, Pacific Community Ventures, Latino Economic Development Center, Justine Peterson, SEDS Finance, Outcap, Access Plus Capital, Allies for Community Business, Working Solutions, Community Investment Collaborative, River City Capital, Women Venture, Raza Development Fund. Each of these different participating CDFI lenders have their own designated page on the ScaleLink site. And this gives some top-line summary information of the total dollar amount of loans they've been able to originate, as well as the total number of loans and some other statistics. This gives a history of their transactions through ScaleLink. Right here, you have Western Alliance Bank, which supported over 740 small business loans. You also have Coastal's State Bank, providing the secondary market for these CDFIs to clear out their balance sheet. Is going to give these CDFI lenders more access to capital. All right, so this just gives a glance, right? The number of transactions, the average loan size, so you can get an understanding of how much you might be able to get if you go to some of these lenders. You have Leaders Bank, which is a Chicago area community bank, and they have micro loans to help small businesses. You got First Bank. So again, average loan size about $12,784. Usually the businesses are going to have revenues less than $1 million. You got Byline Bank. This is another Chicago area bank. Average loan size about $11,470. First Eagle Bank. You got Minnesota Bank and Trust. Now I want to give a quick example of one of the participating CDFI lenders. Right here you have Accessity, and again, this is where you would go to get the micro loan. But essentially what happens is these CDFI lenders are working with a secondary market platform where they will sell their loans. So their loans get packaged together with other CDFI lenders, and then the bigger banks buy those loan portfolios. So that's pretty much how it works. The big banks aren't going to buy these small dollar loans because they need scale. So they're probably buying these portfolios of tens or hundreds of millions of dollars of loans at a time. But if you're a small business, you want to go to a CDFI because you know that they have a steady flow of capital to continue to relend. So you got to understand where to get the money from. And I understand this from actually owning a direct lending company. What happens is you'll have what's called a warehouse credit facility. Same thing in mortgage banking. So you have this dedicated line where you could originate loans just like with a regular line of credit. Once that's used up, what usually has to happen, you have to offload the balance sheet. So you have to sell those loans in the secondary market. The problem with a lot of small CDFIs is that maybe they don't have a secondary market, or they might be relying on other banks and donors to provide more capital in order for them to relend. So sometimes if you're applying to some of these smaller lenders and you notice, maybe they didn't process your application, or you haven't heard from the bank or the lender in quite some time, more than likely they ran out of liquidity because their balance sheet got filled up, or their available credit to lend out has been used up. And so basically they're stuck in this limbo where in order for them to issue more loans, they got to offset or offload some of the loans they already originated. By having a secondary market, CDFIs can originate loans and then they can get them off. So get them off to private lenders, other bigger banks that come in. There's platforms like Loan Street where you have, let's say, originators like Prosper, where they'll sell their loans in the secondary market. You have credit unions that come and buy the different loans. And so there has to be this steady flow of, loans originated, investors, banks, or even private credit funds. So then it frees up more lending capacity for some of these lenders to continue to lend money, right? So that's what you would find at a lot of smaller lenders and CDFIs. Now, if you go to the big banks, they usually hold those loans on their balance sheet because they have billions of dollars to lend out. That's not going to be the case with most CDFI. Just giving you this example so you know where to look for and understand if a particular CDFI or lender actually has money to lend out. One sign of that is, do they have a robust secondary market? I know this video might go over some people's heads, but I just wanted to give you this example. So this is an example. They got loans for startups and expanding businesses, 25K and under. All right. So startup businesses can get up to 25K. They got loan programs for expanding businesses. So 25, over 25, up to $150,000. All right. So a lot of times with these, you do need some type of business plan, right? So they're not just going to hand you bread without some type of plan on how you're going to use it. But for a lot of you guys looking for, a startup loan, this is actually a pretty good platform right here. So this is 25 and under, 8.9% to 14. You get a discount for veterans, no prepayment penalty, low documentation. So you do not need 2023 financial statements or a business plan for startups. This is specific to California residents. There's a whole list of banks on the ScaleLink secondary market. If you understand what institutions these are, you could check some of these out. I might do some reviews on specific CDFIs. They have micro loans up to $50,000 with no documentation, low credit score is okay, very low requirements, but you got to understand where to get the money from. So I just gave you an example. That's all for today's video. Until next time, take it easy and we'll talk to you soon. Peace.